Hello everyone, this is Taha. I'm a financial market analyst in zForex and this is our weekly analysis. So let's dive in. Hello everyone, this is Muhammad Taha Bukhari and this is our weekly video where we'll take a look on the markets and what we will have this week. We'll start with the USD, dollar and US economy, where the last week we had the Federal Reserve meeting, an increase by 25 basis points like expected. We had a different narrative than what we were expecting. The markets were expecting that that's maybe the last increase by hike by the Federal Reserve. We will not say surprise, but a confirmation that the Reserve is still open for another hike this year if it's necessary. Not necessarily in September, but could be later. So the markets are right now recalculating and forecasting significant probability of another hike after this speech. Especially right now, we are waiting a labor market that should slow down, but this right now is not slowing. The PCE also, the last week, that's the core PCE and the PCE, the most important element or parameter or metrics for the Federal Reserve and Jerome Powell that follows the most. There was a slowdown, not as the market wants. So the pressure on inflation still here. If we follow what the Federal Reserve they are talking about or their narrative, the important thing for them right now is the labor market. At least the inflation we are seeing that the Federal Reserve is winning on inflation, but month by month. But in terms of employment, the pressure coming from the labor market is still high. In terms of what? In terms of creation of jobs, in terms of wage, and also the pressure of those wages on inflation. So this week we will have the most important element for the labor market, the most important data about labor market, especially the NFP non-farm payroll. We are waiting that this non-farm payroll show us some slowdown in creation of jobs in USA. We are waiting for 200K compared to 200,000 compared to 209,000 the last time. So we'll see if there will be any improvements, because right now the Reserve wants an unemployment rate that's going to the 4% instead of the 3.6 that we have right now. So we will see this if it happens, because if it happens, it will be a relief for the Federal Reserve to not go further in terms of interest rate. And at the same time, the markets right now, they are seeing that the possibility of a soft landing is so much possible, especially with the numbers that we are right now getting from the USA, where the economy is showing that it's still resilient and still able to support the 5% interest rate or more than 5% interest rate. Of course, an economy can't survive or can't support for a long time this amount of interest rate, this pressure on the economy, but we will see. Other than that, the PMIs, we will have the manufacturing PMI, we will have the service PMIs, composite PMIs, all the important PMIs that will give us an idea about where it's going, the economy. We will have before the NF payroll, the ADP non-farm, which also drop opening data that will make clear where they are going in terms of employment. But the non-farm payroll on Friday will be the most important. Concerning the XY or the index of the dollar, we see clearly that the dollar came back after touching this important technical level. It was around the 99 point, close to 7. Around this level, we had this double bottom. We have a recovery or a reversal, sorry, going from this level until we went to this important area around 102. This area where it played before at support level. Right now, it's playing at resistance level. Also, we have this channel on the 1 hour and the 4 hour, like short-term channel, where the median line is clear in front of you. It's playing its role. Element here, do the DXY can go until 102.5, or it will come back from this level. It always depends on the data that we'll get. Plus, we have the 200 moving average that played resistance here before, so it's also playing resistance here. So we need more developments. Also, If we want to go to the euro dollar, the other image of the XY, the same thing. We have the euro dollar found support around the 1.096 level and coming back. This level is coming from this trend line, but also this channel, down parallel of this channel, of this bullish channel, as the euro dollar went until the 1.12.3 level, coming back, making this correction, touched this support level, coming back. Right now, everything will be dependent to the data. For the data, as we are talking about the euro dollar, for the euro, it will be important too. First of all, before talking about the data this week about the euro, we need to talk about the ECB, what the ECB had done, and how this was impact, how this has an impact on the euro. The ECB, it's clear from the data that they are caring so much about the economy. Right now, with this interest rate that's more than 4% or not 4%, 4.25, it has an impact on the economy. And the economy in the European Union, European area, it's not that much resilient as it's the case for the USD, for the US. And we saw that on the contraction on mini PMIs from the services, from the manufacturing, the composite, especially in Germany. And we have a lot of data that's coming to us where we see that the first economy in the European area, this is Germany, is really struggling, this can develop more in the future. So the Lagarde make attention to this point, that the impact of this increase of this rate hikes on the economy and the impact in the future that may lead to a recession, if we want to say, but the probability still high. We need to say this about the European Union with this interest rate, with these hikes against what is happening in the US. So that's what matters the most. ECB seems less hawkish and more dovish, as they said that they made this increase, but the next increase or the next hike will happen or not, we don't know. It's always like that at the reserve, the words that they used to use, that we are all data dependent, and this makes things always keep the door open on what could happen. This is what the Federal Reserve, they said too. So data dependence right now in front of us, the data, they are not that much good for the European Union. Inflation also for the EC, for the European area, it's slowing, but we are seeing that is still sticky. Especially we saw that in Germany, we saw that in France, we saw that in other countries. So if it means something, it means yes, the ECB or the European Central Bank is winning on inflation, but with condition that it's not slowing or going down as expected. So the war on inflation right now from central banks in Europe and the Reserve, the Central Bank of America, it's giving, we are seeing slowdown in inflation, but at the same time, what's matter do inflation will go to its objective of 2% that they are fixing. So right now, for the euro dollar, what we are expecting, if any breakout from this we can say 1.95, for sure we are going out of this bullish trend that we are seeing right now that started from the 31 May and until the 18 July, when we saw this correction. We had this first correction here, this second correction. The euro will continue up, it's not clear, but with this, the euro had this movement up, or had this bullish make this bullish trend, generally because the ECB was hawkish, was wanting to increase rates. In the same time, the market was pricing that the Federal Reserve, it's the end for it, especially when inflation started giving us the CPI and the core CPI started giving us data that showing that inflation is slowing down in the US. But right now we are calculating other things, especially like I said in the US, the labor market, and the ECB, the probability of recession, because right now the markets are really concerned about the probability of recession in European Union and slowdown in European Union or European area economy. That's for the euro. For the data that we will have this week, we'll have inflation data from the European Union. We'll see the sticky inflation, if it will come stronger than expected or as it's expected. Also, we have the GDP, we have the growth rate in the European area. We saw last week that we had this technical recession in Germany, and many economists they are talking about that we entered the recession in Germany. We will see how data will be. It will be same for the European area? Are we in a real recession, or are we entered the stage of a recession rather than technical but real recession coming from that we can see in the labor market, we can see in the manufacturing, we can see on the services, we can see on the different area of economy. We will see this week. Also, we have, like I said, the inflation level that will give us an idea about the signals of inflation. So this week it will be important for Europe to have an idea about economy. Right now, I believe that inflation, that's the most important topic that everyone was talking about. It will be, especially for Europe, will be followed or will be accompanied with another fact, with another important element that we'll start talking about is a recession. Are we entering a recession or not? Rather than this, for the pound dollar, especially the pound resistance level, like we saw the last week on the 1.31, close to 5, coming back as all with same thing with all the majors, coming back like the euro dollar. Other thing that is important for the UK right now, situation in UK, as to this week, we'll have this meeting by the Bank of England, and this meeting, the market is pricing that, projecting that 25 basis point increase in interest rate, taking the total accumulated hikes to 5.25%, which is so much high. Why? We know all that inflation is UK is sticky. It's not even showing, like last data showed a little bit of slowing down. It was like a positive, but we need more data confirming that inflation is really slowing in UK. In the same time, this interest rate at those levels, if there is any developed country where the projections for a recession is so much high, is the UK. And right now, even if the pound was going up by these hikes coming from the UK, making the UK bonds and making the pound preferred type of currencies, right now it's becoming it's given as the other face of the coin, which is a possibility of a recession. And the recession in the UK, it's like I said, it's high probability. So this is why we may see more pressure down in the UK. The next support, if the pound dollar continue down, will be around the 1.275. We have this down parallel it's for a long term for this channel, this bullish channel, work it 1, 2, 3, and it may work here also the 1.275. Also, in terms of resistance, it's clear that is a bullish trend. We will see if the bullish trend is still here in the terms of the daily, in terms of the long term, but we will see if we break this down parallel or not. In terms of to get out of this bearish short-term bearish channel, we need to go beyond, I believe, if we go beyond the 1.30, we entered a new higher highs or a new leg. We are forming a new leg for the pound dollar. Rather than that, nothing is happening. For the data that come in, like I said, the Bank of England meeting this week will be the most important thing. We'll have a lot of PMIs from the economy in UK. We should mention is the IMF forecast and the report that came the last week, where the IMF say that the economy in UK could give better than expected performance. This could be like a positive projection by the IMF about the economy in England, in UK, but the market is fearing that this interest rates, those hikes, could not work for them in the long term and in the long perspective. This is for Europe. We saw the euro dollar, the pound dollar, and also the XY. For the surprise that came from the back of Japan, as we will talk about the Japanese yen. The thing that was surprising is the curve yield and the change on that happened, especially on loosening, loosening of the yield curve control policy that happened last week, where we didn't saw any change in the interest rate or the interest rate in Bank of Japan from Bank of Japan, but we saw that the Bank of Japan seems that is getting out slowly from its policy, from its easing policy that they follow from long time, as they said that their target for inflation is still not yet. They still want more inflation, they want more inflation beyond the 2%. Plus, they want that the most important thing, that increase in wages. That's what they care about. We saw that the economy stagnation that the Bank of Japan, the Japanese economy is living. That's what's really concerning the Bank of Japan. The Bank of Japan, with their new president, what they want to do is to re-engineer a new economic model for the Japanese economy. So this shift in, or small shift in monetary policy could help the yields to help the monetary policy and help the attractiveness of the Japanese bonds. And we saw that we had sell-off on the dollar Japan. This morning we had this positive increase in the dollar Japan. Why? There is one thing important I didn't mention it, is the US 10-year, and we saw that the markets are taking the interest rate back to 4%. After taking them back to 3.75, we are talking back to 4%. Why? The market is projecting maybe another hike by the Bank of America, the Federal Reserve, the Bank of America, Bank of USA. So this leading the US 10-year, the US 2-year also to new highs. And this, for sure, we know the negative correlation that happens from time to time between the US 10-year and the correlation between the US 10-year and negative correlation between US 10-year and the dollar, and the positive correlation between US Japan and the yields. So dollar Japan is getting more attraction as the yields for the yields of US are going higher. The support around in the dollar Japan is an area between 1.37.7 to 1.38.7. This area is playing support, it's playing resistance here, support, and it's also keep working. It's coming from it's a level, it's historically important, that worked before. This is why we are sticking to this level. It's historically important. We can see that it worked before in many times. And it's still working and still holding, and it's holding dollar Japan. It's coming back, and that's important for us. What also matter for the dollar Japan, we will get details in the release of series of data, including the minutes from the Bank of Japan, why they made this decision. We will see how this happened and why, and will give us more clear perspective on how the Bank of Japan is seeing things. Also, we will see retail sales, we will see the industrial production, employment rate, and consumer confidence, that will give us an idea about the economy, as we have right now a positive balance of payment and a positive trade balance. So this which is good for the for the Japanese economy. The last important asset that we will care about is the Australian dollar, and we are able to see right now that the Australian dollar is not clear where it's going. We know that the Australian dollar, or the Australian economy right now, we may see an final 25 basis point increase in the interest rate by Bank of Australia, and after the pause. But the thing is, right now the economy in Australia is so much dependent on the Chinese economy. We know that Chinese economy right now it's not doing well, and one of the things that happened last week is some informations coming and the reports coming and the rumors coming that the economy in China there will be aids, there will be help, there will be boost from the government to the economy, because they need to this. There is a stimulus in many sectors, but one of other things that the Chinese doing, rather than just like stimulating the classical way, that the way that we know, it's another way that they want right now. The Chinese economy trying to enter a new era where they want to diversify economy, like then just focusing on real estate and the housing market and infrastructure, going to new type of sectors where technology and diversifying their economy to be more able to be resilient. So this could have an impact on Chinese economy, and this also will have an impact on the Australian dollar. Australian dollar, it's like not clear, it's like a range, it's like a random type of movement is are happening. So right now we will see this how we have a range that started from the 7th March 2023, and we are not seeing any clear movement on the Australian dollar. So it's right now resistance level is around the 0.69, and we have a support level around the 0.66, but any clear direction, it's not here in front of us when it comes to Australia. But any positive data that will come from China about economy, this will boost for sure Australia. As we know, Australia first economic partner is China in terms of, and especially in terms of exportation of raw materials of mining products. So this is what we have for this week. I wish that this video was helpful, and see you the next week for another video and another perspective about the market. Thank you so much. See you next week. Bye bye.